Good day, Junior Tukkies. Today we are going to look at a new chapter, the General Journal, Activity 1. So, just to start off, what is the General Journal? The General Journal is used to record transactions that do not belong in any other journals. So, in other words, it's not a cash transaction, it's not a credit transaction, it's not a reversal of a sale, it's not a reversal of a credit purchase, not petty cash. So, it doesn't belong anywhere. Therefore, it goes into the General Journal, or it includes transactions that does not occur frequently. So in other words, it doesn't happen often enough so that it has its own journals. Therefore, General Journal is used. And then the General Journal shows the account debited and the account credited and a narration, a brief description of the transaction for every transaction. And because most of these transactions influences debtors and creditors, there's special columns for the debtors and creditors control accounts as well. The source document for the GJ is a journal voucher. And when we post to the General Journal, it's done on a daily basis to the General Ledger, except when we post the control accounts, because there's many debtors and creditors transactions, so we will post only the control columns at the end of the month. Transactions that we will look at in the General Journal, now these are the GJ transactions. So if it's not one of these, then they don't belong in the GJ. The first one is bad debts, then withdrawing of merchandise or non-cash items by the owner, interest on an overdue account, capitalization of interest, transferring of balances between debtors ledger and your creditors ledger accounts, and then your year-end adjustments and closing transfers. But that will be discussed in a separate chapter later on. So, if we look at the layout of the General Journal, first of all, number 1 refers to our journal voucher number. Then number 2 is the date. And sometimes these two columns is replaced with the number of the transaction column. So they merge it into one. Instead of having a journal voucher in a day, they just put the number of the transaction. Then the details here, account debited and account credited refers to which account in the transaction is debited and which account in the transaction is credited. We must always write the debit transaction first and the credit transaction second. That is the main rule for the GJ. And then number 4 and 5 refers to the posting. So I'm posting to which account and the amount for it in and so for the posting we have the General Ledger. We either refer to the General Ledger, balance sheet or nominal accounts in the folio and then link it to that amount, or we refer to the debtors or creditors ledger. So we reference DL or CL in the folio and then link it to the amount. So the number 5 is the rand value of the transaction. Then if there is a debtors or a creditor involved, we technically have a triple entry. Now the triple entry is the journal first of all, and then posting to 2 ledgers, the General Ledger and the debtors or the creditors ledger. So because this number 4 references the debtors or creditors ledger, and there's many transactions that influences the control accounts, they have created control columns for the debtors control and creditors control, and they have to be entered there as well. Now, I hope this doesn't seem too overwhelming. We're going to look at this for transaction by transaction, and you'll understand as we go along. So, activity number 1. They ask us to record the transactions in the General Journal of JT Traders for July 2022. So, transaction day 4, F. Lawrence, a debtor, owed 2,500 rand, but his account is 6 months in arrears, and charge him 16% per annum interest. So if we charge interest per annum but for 6 months, our calculation is 2,500 rand times 16% for 6 months. So we're going to charge 200 rand interest. Transaction on day 8, JT Stores was informed that J. de Klerk, who owed 390 Rand, has left the country and couldn't be traced. His account must be written off on the instruction of the owner. So we don't know where he is. We're going to lose it. We record a debt. Then a loss of 390 Rand of the bad debt. Then day 15, the owner, B. Brooks, took goods for stock for private use. Now, when you take stock for private use, the selling price of these goods was 4,200 Rand. But the owner has a perk. He's the owner. He's not going to pay full price. He's going to take it at cost price. So you have to work out the cost of sales. So 4,200 times 100 over 150. He is going to take this at 2,800 Rand. Day 20, EFT 236 for 1,845 Rand issued to LM suppliers for an office desk purchased was entered as stock in the CPJ. So there's an error in the posting. So draw a little T account, trading stock and equipment. So we recorded it as equipment, as trading stock, but it should have been equipment. So we're going to credit trading stock and put through the correct transaction for equipment. Day number 21, stationery purchased on credit from Regal wholesalers for 2,540 was erroneously, so incorrectly, posted to the account of Regent wholesalers in the creditors ledger. So it was posted to the wrong creditors account. So if we have to now draw our T accounts, Regal and Regent, both creditors, we posted it to Regent. So the error is in Regent's account. So we must correct that by debiting Regent and crediting Regal. Very important. You cannot do the corrections of errors without a little T account, because you are most likely going to make a mistake. So draw that little T accounts in rough somewhere so that you can see it very clearly in front of you, so that you don't make unnecessary mistakes. Number 24, goods returned by debtor B. White per credit note 686 is incorrectly recorded in B. Byte's account. Yet again, wrong debtor. So we draw our little T accounts, Byte and White. They are both assets. We recorded the return in Byte's account. So we credited Byte, but that was wrong. So we have to debit Byte and then credit the correct one, White. The last one, W. Wilson, a debtor owing 3,600 Rand, was declared insolvent. His estate paid 40 cents in the Rand, write off the balance as irrecoverable. So if he owed 3,600 and 40 cents was paid, he still owes 60 cents, so 60%. And that must be written off. So it's the 3,600 times 60 over 100 gives us 2,160 Rand. That must be written off. So if we now look at the journal, our first transaction is journal voucher 01 on day 4. And now we have a debtor. So we are going to write debtors control and F. Lawrence. Now I know some teachers don't want you to write debtors control, and the mark most is allocated for Lawrence. However, please write both, because if you don't understand that this refers to a double posting entry, you're going to leave out things. So write both. Debtors control to remind yourself that it influences the control posting, and F. Lawrence to make sure or to indicate that it posts to the debtors ledger account. So technically it's not necessary to put the debtors control there above, but I prefer my learners to do that so that they don't forget to post it to the control column here. The entry that is wanted though is the F. Lawrence for 200 Rand, referring to the debtors ledger, but there's a double posting, so I prefer that my learners put in both. What was it for? Interest on overdue account. Now, yet again, this little yellow dot here, normally the basic layout is to put the credit entry slightly tab space to your right. It's not a an absolute necessity, but it does make things a bit clearer for the marker. So get into the habit of leaving a small space here and before you write your credit entry. And then the 200 Rand must be posted to the income account. Narration, just say what happened. Charged interest for 6 months at 16% per annum on an overdue account. So it's a short description of the transaction in your own words. The next transaction was for bad debts. So we're going to always debit bad debts and credit the debtors account. But yet again, debtors is a double posting. So we have to put debtors control for the control account posting and J de Klerk to refer to the debtors ledger. Double posting, debtors ledger and debtors control. So put both. Get into the habit of putting both so that you don't forget to post to the control account and indicate which debtors ledger account was influenced as well. Narration, just say what happened. We wrote off the account as irrecoverable. Then journal voucher, and what do you notice about the journal vouchers, people? They follow in order. So as any document, all voucher numbers will follow in order. So 1, 2, 3, or whatever you decided to name them or make them, because you had to make your own numbers. On day 15, the transaction was drawings. The owner withdrew stock. So yet again, we don't record the selling price, we record the cost of sale. So very important, make sure this 2,800 Rand is the cost of the goods sold, and that is, or the cost of the stock that was taken by the owner. He's taking stock for his own use, recorded at cost price always. Next one, we made a mistake by recording equipment as stock. So we're going to have to reverse track transaction. So credit trading stock, debit equipment. So putting the correct transaction through for equipment, debited, crediting trading stock, and the narration is just correction of an error. Next transaction is yet again an error. We posted to the wrong account of the wrong creditor. So we credited Regent's account instead of Regal's account. So cancelling Regent by debiting that account and putting through the correct one on Regal. So yet again, especially when you are working with two debtors or two creditors, important to put the name. There's a double posting. First to the wholesaler or the creditor's ledger account, Regent wholesalers, and secondly to the control account. So Regal must then influence the creditor's control as well. And then Regal account, we have credited there because that was the correction entry, and yet again first refer to the creditor's ledger, and then second posting refer to the control account, 2,540. And our narration would have just been correction of an error again. So if I have to now look at the last one here, so we have, correction of an error that we left out here. Okay, and then we are correcting an error again. We posted to the wrong debtors account. So but was the incorrect entry. So we have to debit. So we have to debit Byte's account and credit White's account. So debtors control is involved. There's a double posting entry. So Byte's account refers to the debtors ledger, and we have to remember that it influences the control account as well, 686 Rand. And then we have to put through the correct entry by crediting White's account in the debtors ledger and remembering that it influences the debtors control account as well. Here again, just a correction of an error. Then the last one, bad debts. So we debit bad debts, credit Wilson's account. Yet again, how much though? 60% must be written off. So 3,600 times 60 over 100 gives us 2,160 Rand. And remember, there's a double posting entry, one for the debtors ledger and one for the control account. Very important to remember the double posting entry. And that is all for this activity. I hope that the general journal makes a bit more sense, and I hope you have a wonderful day. Thank you from Mrs. de Mailon.